Hey guys, it is Julie here with TipRanks. Today we're taking a look at 3 unanimous strong buy stocks, all priced under $30 per share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Like I said, we're looking at stocks today that are all priced under $30 per share and come in with nothing but buys from Wall Street Analysts. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for their stock's future. Just before we get into these unanimous strong buy companies, this is a reminder to check out the Smart Investor newsletter over on TipRanks.com. This is a unique investor newsletter that is sent every single week, which will help you track macroeconomic, market-wide, and company-specific trends that will affect your smart investor portfolio holdings. The TipRanks Smart Investor Model Portfolio harnesses TipRanks' exclusive Smart Score rating system and will help you funnel your TipRanks knowledge into your investing success. Of course, there will be links in the description down below so you can go check this out for yourself. Now, jumping right into these 3 stocks, today we're starting off with a company called Flex. Their stock trades under the ticker FLEX and is currently priced just above $27 per share. They've had some pretty impressive growth this past year, currently up 58.5%, and they've seen growth of over 13% in the last 6 months. Flex is a provider of real-time supply chain insights and logistics services to companies. Led by some of the industry's most innovative minds, Flex's approximately 170,000 employees around the world design, engineer, and deliver logistical and manufacturing solutions for customers at more than 100 sites in 30 different countries. They deliver technology innovation, supply chain leadership, and manufacturing solutions and services to diverse industries and end markets. The company shared their Q1 earnings report on July 26, where they did come out with an earnings beat, coming in 6 cents per share ahead of expectations. And that was Q1 earnings per share of 57 cents and revenue coming in at $7.34 billion. Weighing in on the results, their CEO commented that their results this quarter demonstrated the strength of their diverse portfolio from a product, customer, and geographical perspective. The many long-term secular trends and the solid foundation of our business give us confidence that we'll continue to effectively navigate a dynamic macro environment, drive growth, and deliver value. Looking at the quarter, they did say that consumer trends remain soft, but generative AI and ML applications are driving longer-term opportunities, and they're seeing strong growth in renewables. Their stock currently has 6 analyst ratings, and I know I already spoiled this at the beginning. Of course, they all come in with a unanimous buy. The average price target comes in at $32.50 per share, and that will be an upside potential of about 18.5% from current prices. And we do have several 5-star analysts weighing in on the stock this past month. Our price targets range from an upside of 9% all the way up to 31%. Our second unanimous strong buy stock is a company called Constellium. Their stock trades under the ticker CSTM, currently priced just above $18 per share. Their stock has seen growth of 26% in this past year, including growth of over 16% in just the last 3 months. Constellium is focused on aluminum products, serving primarily the aerospace, packaging, and automotive end markets. They are a global leader in the development and manufacturing of high value-added aluminum products and solutions and in aluminum recycling. They provide aluminum sheets and coils for packaging applications. They develop advanced alloys for the aerospace market, and their aerospace products are available as plates, sheets, and extrusions. They also produce advanced solutions for the automotive sector, including auto body sheet, structural components, and crash management systems. They have approximately 12,500 employees around the world, operating 28 manufacturing sites. They also shared their latest quarterly results on July 26. However, they did come out with an earnings miss. For their Q2, they reported earnings per share of 38 cents, which did come in 7 cents short of analyst expectations. Revenue of €2 billion was down 14% year over year, as well as their shipment of 398,000 metric tons, being down 6%. But their chief executive officer did say that he was very pleased with the results of their team in the second quarter, including record-adjusted EBITDA. Demand remained strong across several end markets during the quarter, and their team continued to execute very well despite significant inflationary pressures. But despite this earnings fumble, as you guys know, all of the analysts currently have a buy rating on the stock. And not only that, they pretty much all increased their price targets following this report as well. With 6 buy ratings, the average price target is currently over $22 per share for an upside potential of over 25%. And all of our analyst price targets are coming in with double-digit upside. On the low end, we do have a BMO capital rating with an upside just over 10%, and on the high end, we have one buy rating from Credit Suisse with an upside of 38%, so some pretty bullish outlooks there. And last but not least, our third unanimous strong buy stock is Instructure Holdings. Their stock trades under the ticker INST, currently priced at about $26 per share. Now, they've had a few more ups and downs, and overall the past year are just up 5%, and looking at the last few months, just up over 3%. Instructure is an education technology company. They are the home of Canvas LMS and the Instructure learning platform that benefits millions of students and teachers worldwide every day. Their Canvas MLS is the world's #1 teaching and learning software, and if you have kids at home, you've probably had to sign in to help with some homework on this before. Their programs are used for both K-12, higher education, and corporate education as well. With over 7,000 global customers and 6 million plus concurrent users, they have an over 90% best-in-class customer satisfaction score. Their Q2 earnings results came out on July 31st, where earnings were in line with expectations. Q2 earnings per share came in at 19 cents per share. On the revenue side, they reported $131 million, which did grow over 14% year over year. Their CEO noted that their second quarter results were solid, with double-digit top-line growth, best-in-class margin performance, and strong free cash flow generation. They're as optimistic as ever about their outlook for sustained growth and profitability. And of course, that is reflected by the analyst ratings as well, as they currently have 7 buys. And their average price target comes in just above $33 per share for an upside potential of 26.5%. Once again, all double-digit upside coming in from analysts, and in fact, our lowest price target in here is still nearly 22% upside, and high-end price target from Truist Financial with an upside of 33%. So there are 3 companies, all priced under $30 per share, with unanimous buy ratings from analysts. Let me know your thoughts in the comments down below, what you think of these stocks, which one catches your eye the most. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at, so please make sure you're always doing your own research and due diligence. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.